All right, and welcome back for another episode of Carnivore Trades. Today is Tuesday, July 9th, 2024. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. And we've got a special video today. Today's guest is Jason Shapiro of Crowded Market Report. Does great work finding really good contrarian trades, crowded trades, obviously, as the name suggests. Trades that are piled in, and does a very good job of taking the other side of that. Has some great market insights. So, Jason, how are you doing today?
Good, man. Thanks.
Awesome. So yeah, let's get right into it. So right now, S&P 500. I actually just read today that on the Spider, we had not only the lowest volume of the year, but I think it was the lowest volume in the last 3 years, and that's including holidays. Just about 27 million shares on the SPY. Very, very light. And that's after the holiday too. So kind of feels like institutional traders still kind of aren't even back from the holiday here. And we're kind of just in that summer doldrum period. Is that kind of a market where, we have some data coming out. We had Powell talking today. We have CPI obviously on Thursday. Is that kind of an environment here that's just kind of conducive for neutral to upside?
I mean, like you said, I think the CPI obviously is the big thing this week. I don't know that anybody's going to make any big bets before that. So we're just drifting. And I mean, in a market that's going up, that's a bull market, the drift tends to be to the upside. So, that's where we're at. We're at another new all-time high close here. That's where we're at. Bull market. What can you say? Sometimes it's just that simple.
And so we have some concerns, or at least there's been a lot of concerns voiced. One of the things that's been talked about ad nauseum is the breadth in the market. And I hear it every day. One of the things I said yesterday was I flick through Twitter, and if I flick, three scrolls, I see at least one post about the S&P 493. The Mag 7 is dominating. It's just NVIDIA. The breadth is at historic lows since 2008, or this, that, and the other thing. Is there any alpha in that if everybody's aware of it?
I think you just answered the question exactly the right way. If everybody's aware of it, then what's the alpha?
Right.
It's so highly observed that how is there an edge there? It's been obviously the story, and a very, to me, amusing story. You can't deny it, right? Okay, maybe there's some things that show breadth that aren't so bad. There's some that show that it is bad, but we can take the assumption that it's not great. That's fine. So what? You know what I mean? I don't trade the breadth. I trade the S&P 500. It's on a new all-time high. Like, like, can you argue that a lack of breadth is an indicator that the market is going to go down at some point? If you'd like to argue that, then okay, argue that. But don't be short a new all-time high. What's the point? You know what I mean? Like, everybody's trying to catch the top pick. And to me, it's all about the psychology. Everyone wants to say this is Euphoria and it's it's 1999. It's not, clearly, because I still think there are more bears than bulls. Um, this what really this breadth thing does is it kills active managers, and it kills people that refuse to chase, NVIDIA, and refuse to chase whatever else, right? Or whatever those 7 stocks are. They hate Tesla. They don't want to chase NVIDIA. Well, those are the things that are going up. So everything else you're buying is not working. So it like creates this anger, and that anger turns into bearish. And I only say this because I have been there. You know what I mean? So I know what this feels like. Like, I'm been trading now for 30 plus years, right? I've made all these mistakes. I'm sure I have many more mistakes to make in front of me, but this particular mistake I've made, and I know where it ends up. It ends up losing money is what it ends up doing, right? So I see in these people mistakes that I have made in the past. People are like, oh, you're so judgmental about it. I'm like, I'm not judgmental about it. I'm actually trying to help. Like, I'm recognizing mistakes that people are making that I have made. We're all humans. We all have the same sort of thought processes and the same psychology. And so therefore, we all end up at some point making very similar mistakes, right? So what I'm recognizing in these people that are bearish here and using breadth as their big thing, are mistakes that I have made in the past. You know, it's the worst breadth since '08, except that that number of where it's at was in late '08 after the crash. So, like, you could argue that that means it's a buy, because if you had bought the market the last time the breadth was this bad, you would have been buying it in November of '08. If you had bought the market in November of '08 and you just sat on it until now, you're pretty damn happy, man. You know, call me crazy, but you're pretty happy if you bought loaded up in November of '08. So why can't people take that side of it? Hey, this hasn't been the buying opportunity like this since November of '08. Why not look at it like that? I don't know. Well, I do know, because they want to be bearish because they're missing out. I get it. I've been there.
Yeah, I believe you brought that up a few weeks ago. I saw in one of your videos, and it's funny. It's like, I mean, wouldn't that be the ultimate just absolute anger situation where, okay, Mag 7 stops going up, and then you have essentially like capitulation in the 493, and then all these stocks that everybody hates. We saw it in Tesla. We've seen it in Intel, even AMD. You know, some of these stocks are playing catch up. We had junkers like Rivian running, you know, the other day. I mean, I'm not saying it happens, but I could see the situation there for like the ultimate anger play where the Mag 7 stops and everything else just picks up. You know, people talk about equal weight S&P. You know, it's not making new all-time highs, but it's what, 1% away. It's not as if it's going down with the market going up. So I think that there's definitely something here to be said. And I agree with you as well. I've been there before. You know, I feel like I'm kind of being, I got to remind people, like, I'm not trying to be self-righteous. I'm not trying to be on the high horse. I'm trying to keep you from doing what I did. I thought in 2011 we were going to have hyperinflation. The markets, it's going to happen. It has to happen. And guess what? Blown
Yeah,
account. You know, when I was younger, blown account.
right.
And you know, it's not worth it to you know, to fight it.
That's the whole point. You know what I mean? We all come up with our macro views or this and that. You have to reduce your ego and say to yourself, I could be wrong, right? So why fight the tape? You know, if you think the market is all this overvalued and it's a big bubble, well, that implies you think it's going to go down 40, 50%. Well, if it's going to go down 40, 50%, you got plenty of time to get short. You don't need to short the all-time high. And I've been saying this on videos for over a year now, right? You don't have to short the all-time high. What's the point? You know? Um, and that all comes down to, you know, ego. And look, again, I've been there, right? And it all comes down to now you can't miss it. You've been shorting it for so long and losing money for so long. You can't miss it now. You don't want to miss one tick. I know the feeling. It's the most expensive thing that you can do. So it's just not a very good thing to do. Let me ask you something. The Mag 7, NVIDIA, Tesla, whatever they are any of those in the Nikkei?
No.
Okay, well, the Nikkei is at an all-time high here too.
Yeah, they're juicing the tape. They're putting, you know, reverse repo into it. And I mean, that's kind of what Japan's doing. They're juicing the tape. And you know, when you have bottom line, the market goes up when there's liquidity and it goes down when there isn't. It
Full,
doesn't matter
full
what your
stop.
macro, you know, I've been calling it the summer of narrative destruction, because a lot of these macro guys, they got it right. They got everything right that was going to happen with the yield curve, or everything right with bonds and you know, the CPI. But the market just, you know, it dips 20 points and then we just go right back up.
No, I
So
love
it's
those
it's
guys. I
that
got everything right except price. That's what they say.
right.
But that's the only thing
Yeah,
that matters. So, like,
right.
I got everything right, but I lost a ton of money. Good for you. You know what I mean? I
Yeah,
got everything wrong and I made money. Like, which one would you rather be? You know, be
right.
wrong, make money. I say that all the time. But let's be wrong and make money. This game is about making money. You know, take it for what it is. That's all it's about, right?
Yeah.
So being right about the macro, about what it's just so ridiculous. It's just justification, you know, like make money. Who cares if you're right or wrong?
Yeah. Um, so another thing that I think you also brought up last week, and I touched on this in a video last week as well, but is there a scenario kind of like a la like Jan 2018 where um ironically the breadth improving is exactly what you don't want as a bull? In a sense where when the breadth, or if the breadth finally improves, it's a big thrust, and that's what where you get that bear capitulation. So you get like a big 3 week.
That's my thought, and I don't know if it's 3 weeks. It could be actually be a lot longer than three
Yeah.
weeks. But to me, this market ain't going to top until the breath goes. You want to talk about euphoria? Euphoria is when everything's going up. That's euphoria, right? So let's see that happen. And I don't know if that's what's going to end up happening, right? But to me, at this point, the way I see it, it feels to me like that's what has to happen before this market's going to top. And that doesn't have to be, first of all, that doesn't have to start now. That could start in a year. We could do this for a year, another year for all we know, right? But at some point, that's where the euphoria will come. Now it's just buy everything, you know, and that will be, buy the crap, you can say what you want about NVIDIA, all right, but it ain't the crap. This is a company that's making more money than anybody, in the history of the world, arguably, right? And their customers are the biggest companies that this world has ever seen. Like, can you imagine being this guy? I always say he must go home and go to sleep and giggle himself to sleep every night. His customers are who? Amazon, Meta, Google. These companies are sitting on how many billions and billions of dollars of cash?
Well, in the
They're
U.S. Treasury too.
Right, and
The
right, exactly.
government, yeah, the
They're
government.
they're dying to spend it with him.
Yeah.
And they have to, because if one does, the other one does, or they fall by. This guy must go to sleep giggling. So say what you want. You want to say it's overvalued. You want to say whatever. Okay, but don't tell me it's crap company. This is not, pets.com, man, by any means, right? So to me, until those go, whatever the pets.coms of our day are, probably, like you said, that car company or whatever,
Yeah, Rivian and yeah.
right? Those are probably those, right? And the
Yeah.
truth is, those did that already. They did it in 2021, you know, and then they lost 70-80%, right? So they
Yeah.
already did their crap run, and the market already kind of, not, let's not call it crash, but had a big move down on the back of that euphoria, right? And we have, like, from my eye, you have two groups calling this euphoria now, right? You have people that are like my age, right? That were through the late 90s thing, right? And they got burned on that for the most part, right? And have sworn that they would never do that again. So now they're calling this euphoria. I got burned in 2000 with this, so I'm not going to fall for that again. So they're not in this, right? And then you have the younger people that did it in 21. I know a bunch of people that did it. I know a bunch of younger people that did it, because a lot of them were coming to me asking me about trading at the time. And what they were doing, for the most part, I used to hear this all the time, was they were buying these stocks and they were never selling them, because you didn't have to, because they would, like, if it went against you, you just held it. It came back. I had a number of people tell me that, oh, I don't have to sell it because it comes back. Okay, until it doesn't. And then the stocks went down 70-80%. And then they would tell me, well, I haven't lost any money on it because I haven't sold it. Like, it's the typical psychology that new traders go through, right? I'm like, dude, look at your account, okay? Not your open P&L, like, not your profitable trades. Look at your total account size. It's lower. That means you're losing money. Just because you haven't sold it, you know what I mean? Doesn't mean that you're not losing money, right? Like, what do you, one guy showed me his account. Well, look, here's all my trades. And he's showing, look, I made whatever, $30,000. I'm like, on your closed trades, you made $30,000, but
Yeah.
you're down $60,000 in your open trades. Like, that counts, bro. So anyway, you have those people now. They don't want to get caught up in this again, because they got caught up in 21. So now they don't want to be suckered. They don't want to be bag holders again. So you have these two generations of people that don't want to be bag holders, so they won't get involved here. So how can that be euphoria if they're not involved? Like, that's what they don't get. It's all this ego thing, right? And that's not just one person. It's like I say, everybody's the same, man. We all think the same, right? Our minds all work pretty much the same. Our psychology is the same. So if they're not going to be involved, then how is that a euphoric bubble? It's not. And I don't think that they're ever going to get involved at this point. I really don't, which makes me think that this thing has more legs than anybody could even imagine.
It usually, yeah, from what I've noticed in my experience too, like the people that are they're calling it a bubble, they'll never get involved. Like they're nothing's going to change their bear outlook. That doesn't mean that they're going to capitulate and go long, or excuse me, that's exactly what it means. They're not going to capitulate and go long. And a funny thing about I mean, it's not the perfect, but I follow AAII, and the bulls actually downticked last week as we made a new all-time, as we hit a new all-time high.
Listen, I'm a big position I look at the positioning. People are not getting long into this. People are selling into this. This
Yeah.
is, and it could be something totally else, whatever. But from a positioning and a euphoric sort of psychology point of view, that's all I do, right? I'm a positioning and sentiment trader and have been for 30 years. That's all I do. You want to talk to me about the discounted cash flow of Nvidia and whether it's enough or I couldn't tell you. Honestly, go somewhere else. There's smarter people at that than I. There better be. But when it comes to, this kind of positioning and this kind of psychology thing, that's what I do. Not that I always get it right, but I'm here to say that is not this. It's just not. It could be something else, right? But we're not there. To me, the only way this happens, it's like you said, I don't think that people are going to chase it. They're just never going to chase it, which means it's just going to keep going higher, which is exactly what it's doing, right? It's just running away. Or there's the possibility that we dip, we get a 10% dip at some point, right? And then they buy that. They load in there. They say, oh, this is finally my chance, right? And they load in there.
Or they cover their short and because they're break even, and then it just goes back up.
I think if they buy the dip, that's when the real trouble will come. Because they're certainly not, it doesn't look like we're going to get a euphoric everybody buying. They're just not going to chase it. So that's not going to, it doesn't seem like that's going to end it here because it's never going to happen, right? These bears I hear all the time, they just get more bearish. A guy said it last week, who I've been fading for a very long time, said the higher it goes, the more bearish I get. I'm like, okay, good for you. And
Yeah.
that makes sense in a logical sense, right? Clearly, the higher it goes, the more overvalued it is, right? Except the market's not logical. That's not a trading logic. That's normal logic, but the market is not normal logic, right? The market has its own different kind of logic, right? So I just don't see them ever chasing this, which means we're never going to get that big euphoric blow off top. Like I said, maybe they buy the dip, and we only know A, if there ever is a dip, right? And B, then we can see if they buy it or not, right? We don't know that, but from right this second, there's no way that this is euphoric.
There's some theories that going back to 2020, that's exactly why we had that second leg down, because there was a lot of people at the same time, like shorting the whole way up from like December all the way into February to late Feb before the crash. Then we had that huge drop and we had a just disgusting bounce. It was like 7 days. We had like, it was like 600, 700 points or something. Everyone bought that dip, and that's how we got that second major leg
You're
down.
talking about the COVID?
Yeah.
Well, there's no question. And my stuff is based solely on positioning. Okay.
Yeah.
And I was not short going into COVID because I didn't see people as mega long. But you're right. The first move down in COVID was massively bought.
Yeah.
I got short then. So usually my stuff is trying to pick turns. In that particular situation, I didn't get short until you had that first move down. Then everybody got massively long.
Yeah.
And that's when I got short.
And you still made a killing on, you didn't have to get the exact top tick,
no,
right.
it was a great trade. And then truthfully, then they were selling into the dip. So I was hoping to get long after that, right? I mean, selling into the rip. So I was able to get that. But yeah, no, I believe, and you can't prove any of this stuff. I think it's all driven by positioning. But, people will say, well, it was driven by the fact that, COVID was much worse than people were thinking. Okay, you want to think that, then think that. I don't care. I really don't give a crap. Why? I only care about did I make money or not, right? But yeah, I agree with you 100% on that. That's exactly what happened. And I have the data and the charts that can show that that's exactly what happened.
Yeah. And the thing is, I agree 100%. The longer that I've done this before, the more you realize, like you said, everything is simply just positioning. That's literally all it is. When we sell off a little bit before CPI or something like that, and then the CPI comes in hot. The market sells for 20 points, and what do you think happens? It's called event volatility, right? These players, they have to be hedged, so they price it in. The hedges come off, we go up, and then you get the macro guys like, "How is this happening? The market's stupid. They're idiots." And it's like it has nothing to do with it. It has absolutely nothing to do with it.
It all makes perfect sense because the market's a discounting mechanism. So therefore,
Yes.
the positioning to me is the discounting mechanism. People like to think it's price. I believe that it's positioning. And I think that's quite frankly what most people are missing, right? The discounting mechanism is in the positioning, not price, right? You don't want to be contrarian and fade price. You want to be contrarian and fade positioning, right? We know,
Right.
we know damn well, okay, that as Nvidia was ripping that whole time last year, everybody we knew was shorting into it. I don't care what you say. All right. You tell me, you talk to people, you have people. All I heard was people selling into it. All these furus on Twitter and whatever. 90% of the people I heard were shorting into this thing, right? That's positioning. That's why it kept going, right? They're all saying it's a bubble. They're all saying it's overvalued. They're shorting into it. And listen, one of my clients is one of the, if not the biggest prop trading firm. They have a few hundred people prop trading there. And I talk to the CIO all the time, who oversees all these traders. And he was telling me the whole time, he's like, everybody in this fucking room is either shorting Nvidia or wanting to short Nvidia. And one guy go to him, he told me the story where the guy was like, I want to increase my line because I know that Nvidia is a short here. All my stuff is saying it, and it's like a guarantee. And the guys were like, no. And then he said, I'll put up my own money then in order to get the line to do that. And he did that, and the guy lost like 150 grand of his own money in like freaking 2 weeks. So I'm not making it up. You know what I mean? I don't have bias, right? I try to look at the data. I try very hard not to have bias, right? I'm not saying it because I'm trying to be a jerk. I'm saying it because that's what I'm witnessing. And
Yeah.
I spend all my time not looking at NVIDIA's balance sheet. I spend all my time talking, reading, and listening to what people are saying they are doing, right? And looking at the data. And that's how I saw it then. So,
Yeah. Yeah. One of the things that I always say as far as shorting, or, if I'm expecting a turn at a certain point, let the market tell you. Who cares if you miss the first 2%? If you
exactly.
want to go, and hedge it, go hedge with a short, just put a stop above the high on the at Friday close. At what are you risking? 2%. If you get a 10-20% correction, well, you make a ton of money, and you're risking nothing. You're risking a little hedge. Big deal. You
That's
don't have
exactly
to. You
that's
don't have to
exactly
be
what I'm
like, I
saying.
caught it to the exact tick. I mean, sometimes you're going to get lucky and you're going to nail it, but a lot of the time, it's not going to work, and it's going to be a hemorrhage.
To short a new time on new all-time high close is just silly. It's just plain silly, right? You're not waking up tomorrow and S&Ps are going to gap down 500 points when it just closed at a new all-time high. Could have gapped down 30 points, 40 points, sure. But,
Yeah.
and like I say, if you are right, if you're super bearish, you think this whole thing is a bubble, you think the US economy, is going to go die, you think the world is over, you think the wars in Taiwan and China and the dollar and all these macro bearish things. Great. If you're right, then you're not talking about a 5% correction here in the market. You're talking about a freaking 80% move down in
Yeah.
those cases, right? So why continually? You're not going to have any money left to take advantage of that when it happens if you keep shorting new all-time highs. So be
Yeah.
patient. This is all, like you said, risk reward, right?
And another thing too is if if it's that bad here, it's much worse everywhere else. I think a lot of the reason why we're still going up is there's a lot of capital flight going on here into our market.
There is a lot, clearly, of global liquidity. That's obvious, right? I don't even know how to measure it, okay? But I don't need to know how to measure it, all right? I don't think anybody knows how to
If
measure
the
exactly.
squiggly line's going up still, that means they're still
Everything is
like
going
they
up.
they try
So
to say, oh, financial conditions have tightened.
where?
Why
That's
is
what
it going
I've been
up? It's
saying
still
that
going
forever.
up.
Where have they
Yeah.
tightened? Please
Yeah.
show me where financial conditions have tightened, right? And even scarier is that we're talking about rate cuts coming up at some point, right? I mean, you got to be freaking kidding me.
Yeah.
You got to be out of your freaking. I think these people are out of their minds if they cut rates. I get it, what they're trying to say, but I mean, the
Yeah.
unemployment rate goes from 4% to 4.1%. And all of a sudden, oh my God, we got to cut rates.
Yeah.
The economy's croaking, right? Like I remember when 6% they used to think was the floor for the unemployment rate. that was as low as it could go because there's always at least 6% of people in the economy that are in between jobs or looking for jobs or whatever. They used to think that was the natural rate of unemployment. Now it goes from 4 to 4.1. And like everyone's like, oh my God, they got to cut rates. Like, what are these people talking about? I don't, I'm no macroeconomist. But I don't get it. I don't get it.
Well, I think that's sort of the panic, right? Because or that's kind of a bit of a bear argument, or one of the bear arguments that they're trying to make is that the market's going to freak out if they think the Fed gets behind the curve, essentially. And we can talk about I was going to talk about the yield curve a little bit. You have a little bit of an uptick here in the 210. By the way, we've been inverted for 2 years now, officially on the 210. Just fun
Yeah,
little stat there.
that's like the thing with the breath too, right?
Yeah.
The yield curve we were told, oh, the longest it can ever go is that it's ever gone is 18 months while being inverted without a recession. Well, now it's 2 years and we still don't know where are we going. Like this is like, and it's so dangerous because again, the market's a discounting mechanism. So if everybody knows that, then therefore it's discounted in, and therefore whatever. But um, I kept calling last year the year of, this has never happened before. I used to hear that like every single day. This has never happened before. That's never happened before. Nothing's ever happened before. Okay. So that's what you have to be aware of when things have never happened before, right? Have we ever had, and listen, I'm no AI expert. I'm lucky if I can use my computer, quite frankly, right? But have we ever had something with the potential that this stuff has? I don't think we have, right? And I'm actually going to do a video about this weekend, but I think it's important for people, if you have a view, right? Your view is AI is a scam. Goldman came out today, right? And said, they didn't say it was a scam, but they said the money being invested is way too much relative to the money that it's going to create. Okay, maybe. I don't know. They don't know. Nobody knows. Maybe. But if that's how you feel, I think the best thing you can do is go out and read the opposite, right? Just so you can know, right? Because the opposite is that this AI actually is the biggest thing that we've ever seen productivity wise and all that. And if that's the case, then that's got to be a bullish argument, man, for everything, right? Just about everything, right? I mean, I read this book this week. I saw this guy on TV, Ray Kurzweil, right? I don't know if you can see that.
Yeah.
But this guy is ridiculous, okay? He's maybe the smartest guy on earth. I don't know. He invented incredible things when he was a kid. He invented the Kurzweil organ, which is still pretty much the standard for electric organs, right? And he got into this AI thing and wrote a book about 25 years ago. And what I noticed was that a lot of the things he talked about in that book, and okay, they're sort of predictions, but a lot of the things he talked about in that book are exactly what these people like Elon Musk are investing in. So I think that they are trusting in him, first of all, right? It's no coincidence. Like he was talking about robo taxis and whatever, all this crap in the cloud and all that. And I think these people look to him. He's also the number one, he's one of the top consultant for Google for AI. He doesn't work for them because they can't afford to pay him, but he consults them on what to do about AI. So not only is this a smart guy who knows a shitload about this, but he's also helping actually where it's going is coming from him. So worthwhile reading, because whether you believe it or not, it's always good to hear the other side of the story. Because if he's right, man, first of all, it's scary as hell, the things that he talks about. He talks about that whole electrodes going in your brain and then our brain just becoming part of the cloud and all that shit. And we as people look at that and be like, what? You know what I mean? Like, no, thank you. No one's putting electrodes in my brain. That's always what we're all going to say. But you know what? When electricity came, everyone was saying that too, right? What? I ain't putting that in my house. It's going to burn down my house, right? When airplanes came, people were like, I ain't getting in no mechanical contraption and flying through the air and die, right? Like that's always resistance to change. I'm not saying I want electrodes in my brain either, but probably ain't going to be around for it anyway. But it's just interesting to read about the possibilities so you can have that in your arsenal for like, okay, maybe that may have. And who are you going to go with? The guy who's helping develop what this is actually doing and has had a lot of it right up till now, or some freaking wacko on Twitter who's saying, "Oh, Nvidia's overbought, so you got to sell it here." Like, which one? Believe who you want, but at least read both sides. You know what I mean?
Yeah.
You got to
There's
have both sides of the opinion, otherwise you get stuck.
Yeah, there's a lot of work on that, a lot of books and stuff that go back, as long as you're saying, and these guys like the powers that be, they take a lot from that. So this is not something I know we like to think it's new, but this is something that they've been, working on for a while. So who knows where it goes.
Nobody.
But yeah,
But what
but
we do know is that these stocks are on all-time highs, which is
yeah.
all you need to know, right? That's really all you need to know, because why be short that?
And as a technician too, I look at it and we go up, we go sideways, we go up, we go sideways, not going straight up. There's we're not pulling back, but we're going sideways. And then you pull back through time versus price, that's always bullish.
I like that line.
So
It's a good line.
yeah.
Yeah, none of this,
Um,
even the positioning and all that, I find it doesn't necessarily help you with path, right? The path is pretty random, right? But it helps you with direction, you know. I trade opposite max positioning, right? I have trades that win, I have trades that lose. But let's focus on the ones that win. It's not like I buy the thing and it just goes straight up and never stops, right? I mean, it goes up, it comes down. Sometimes it comes down. I'll get the big in the money early, comes down and gives back 80% of my gain, and then goes up, but 6 months later, if I call something that moved 20, 30%, that's a huge trade for me, right? Um, so I don't think these things necessarily help you with what's the market doing tomorrow. What's the market doing, when CPI comes out and goes and is hotter or whatever, right? The path is a different story, but the direction is what is driven by, I think, positioning,
yeah,
the ultimate direction.
yeah. Um, let's just shift gears just a little bit here. So let's say we talked a little bit about the yield curve and when it doesn't, I mean, we've had some kind of teases with that. It hasn't really fully unwound. Is there anything that I mean, we could sit here and make a bear case for probably 10 hours, but is there anything you could see, maybe election risk, uncertainty, or anything that may be going on kind of into the fall that could, or even just something that could like, kind of like shift kind of where we're at, even not even necessarily with stocks, with any other asset, like any sort of,
Again, does that stuff, election risk? We know the election is going to be freaking crazy, right?
yeah,
They're getting crazier every day, right?
yeah,
Um, I think that stuff affects the path, but
yeah,
does it change the liquidity situation? No. I don't think it's going to affect direction ultimately. Do I think it can affect path? And do I think it can affect path pretty radically because of how crazy it all is? Sure. Um, is Biden going to drop out? Yeah, right, the whole thing, right? Um, and if you're a shorter term trader, you got to play that, but I don't do that. It might add some volatility to my over time, but I can't really, I don't trade the path because I've never been good at that. I do what I do. Um, the yield curve thing, I think, again, it's my guess. But to me, as I listen to people talk about the yield curve, it's actually amazing to me how many people don't even understand what that means, right? They don't even understand the mechanics of how the yield curve works, right? Like I hear people say it all the time. When are you going to cut rates so mortgage rates can go down? Well,
we can't cut it for 2 years
mortgage
above.
rates have nothing to do with them cutting rates.
No, it has nothing to do with it.
My bet is my personal bet, if I'm going to make a macro thing, right, which I don't trade off of this, but if I'm going to make the call, if in fact there's still a ton of liquidity, right, and if in fact they're playing this rate cut game for whatever reason, right, and therefore they are cutting rates when really they shouldn't be, then the yield curve is going to go freaking explode, right? Because yeah, the short-term rates are controlled by the Fed, but the bond market will say, what the hell are you doing, man? You're cutting rates into an economic boom and it's going to explode. I think that's the trade. And I think it's probably the day they cut rates is the day that happens. We saw, like you were about to say, a preview of that last week when we had a weaker number last week, right? Bonds went up at first and then they sold off massively, right? And the curve really kind of went up. Now it's come back, right? But I think that's a preview of what's going to happen if in fact they cut rates when they shouldn't be, whatever that means. So that's kind of my view on the yield curve here. not a tradable event to me at this point. But I think the balls trade would be the day they cut rates, especially if 30 years and the long end goes up at first, you sell right
Yeah.
into that. I think that's the balls trade.
I think it's kind of like a game of chicken. I think they're just kind of posturing because like you were saying, the mortgage rates and this, they don't care about. All they care about is the 2 year. So if the 2 year is too close to Fed funds, they're not cutting. I think it's just kind of like a not a red herring, but it's almost like they're chicken because they know the bond market will go ape shit if that happens.
That's right.
So I think it's just kind of like a talking point that they're
No, that's right. I
kind of
think
hanging.
they feel very sure that they have to keep things like inflation expectations. They have to keep those down. If inflation expectations get out of control, uh, they're in trouble. Let's not
Right.
forget they have to borrow crap loads of money. We all know this story, right? So if rates get out of control, those interest rate payments just go up, and they're in trouble, right? And not to get too into this, I do believe that that is all true, and I do believe that one day the reckoning is going to happen with that. But again, to trade on that, you would have been trading on that since Reagan, right?
I was going to say when we were talking about 2011 earlier, I thought it was going to happen back. I thought a lot of us thought that was going to happen back then. And let's see, what are we like how many thousands of points are we higher now?
You would have been doing it since Reagan, man.
Yeah.
You can read the First Market Wizards book, which has some pretty good traders in there. Paul Tudor Jones, Bruce Kovner, a lot of guys that have done pretty well in this business, right? And that book came out like in 90, 91. And they were all talking about that. The
Yeah.
deficit, it's unsustainable, and you know what I mean? But meanwhile, they made money anyway. Okay, even though they were talking about in 91 how the deficit was unsustainable. Well, they might have been unsustainable, but they're still doing it,
Yeah.
So again, you gotta, you gotta watch out for that, because if you just traded that idea back in 91, you would not be sitting here talking about markets right now. You'd be talking about, your job serving fries or whatever.
Well, and the thing is too, like the more that they do that, the more they can weaponize the dollar too. So in a funny way, it almost actually increases US hegemony. So it's a really interesting dynamic. And I mean, who knows when it's eventually, yeah, it has to unwind, but who knows when that's going to be? Could be anytime. Could be
Could be in
next year. Could
could
be
be in
in
100
30
years.
years.
Could be in 100 years.
Yeah.
You have no idea when, right? Um, let me just turn that off. Yeah. So I lost my thought process there because a stupid phone rang. Um, but yeah, again,
Yield.
yeah, it's the whole point. Like, you can think it, you can see it, you know what I mean? But you can't. That's not what trading is, right? You want to write something about it. Oh, I remember my point when we talked about the bear thing. I did a thing. It was sort of an experiment about, I don't know, 6, 8 months ago, maybe, where I make these videos and I put them out on the weekends, right? And I put two out in one day. One was the bearish case, where I talked about all this, how the government's going to
Yeah.
go broke and the dollar's not going to be worth anything, and we're all going to hell and that whole thing, right? And I showed some data, and then I made a video showing using the same data, and I made the bullish case, right? The bearish case, and I put them on YouTube within like an hour of each other on the same day. The bearish case got like 6 times more views than the bullish
Oh
case.
yeah.
I mean, I call it bear porn.
Yeah.
People
My,
love bear.
if I'm bullish, it's the YouTube, it's the thing. Like if I'm bullish, my subscriber count goes down. If as soon as I start putting out a bear video, it goes up.
They
So
love it. They love the
yeah.
bear porn.
Yeah.
So until then, you know what I mean? Until that ends, right? And that is, again, getting back to the psychology of it all, that is not what 99 looked like, okay?
Yeah.
If you were bearish in 99, no one listened to you. I was bearish in 99, and I lost a ton of money being bearish in 99 because I was bearish the whole second half of 99, okay? Um, and the Nasdaq went up 50% in the last 5 months of that move, right? So I didn't lose a ton of money because at least at that point in my career, I had learned the meaning of stop out, stop loss.
Yeah.
Um, but I, at that point, hadn't really mastered my trading process yet. So I was just shorting it because I thought it was a bubble. And, I thought I was smart in that the shoe shine boy was telling everybody stock picks, and we all know what that means. So it seemed like a short, but it went up another 50% after that. And then the shoe shine boy lost all his money,
Yeah.
but only after all that, right? So again, I was fighting the tape, which I never do now, right? Um, but we didn't see that in '99, man. You didn't have people being bearish, man. I used to be talking. Everywhere you went, you go out to dinner with somebody. That's all they were talking about was how much money they were making in AOL stock or whatever stock. And I would make the bearish argument, and they'd laugh me out of the room. No one wanted to hear it, man. And now we're in the exact
Now,
opposite.
yeah. Now, I'm sure you had the same thing. We were talking about in 2021. I had friends in 2020 never bought a stock in their life, and they're like running circles around my portfolio, just buying random companies, like friends that I know that work at like pizza places,
No, I
and
know.
they're crushing me. And then now I go out, if I tell somebody I'm an equity trader, they're like, oh, I can't touch that. I lost too much money on crypto or something. And it's like,
Yes.
so everybody's not in right now.
Not even freaking close. 21 was the bubble, man. They missed it. That
Right.
was the bubble because they were the bubble. That's just it. When
Yeah.
the pizza guy is making more money than you trading stocks, that's the bubble.
Yeah.
It's just not what's going on now. It just is not. So, and
Yeah.
we're, and I don't think it's ever, like you say, they're never coming back. So I don't think that's ever going to go on.
I think the only thing that would do it, like, so in 2007 we didn't have a blow off. So eventually I think, yeah, you can get to a point where the macro comes home to roost, but that's the only other way. I mean, look at, you were saying the bear case a minute ago and then the bull case right to that. Well, like last year, the biggest bear case, and I was short for this. I predicted that the banks were going to have trouble in March. They did. And they went down for how many days?
Three?
Four,
Yeah.
four. And that was the most bullish thing that could possibly happen. Oh, banks fail, they'll throw liquidity at the system. So I had to cover, way earlier than I wanted to. And the rest is history.
I mean, look, even in 2007, okay, and 2008 and the whole financial crisis. At that time, I worked for a pretty big multi-strategy hedge fund, right? And I don't know, there were maybe 20 something PMs in there managing hundreds of millions of dollars each. Pretty smart people. Um, they knew it. Everybody knew that it was the housing bubble and all that, right? Except they knew that in 2005. Okay.
Yeah.
So, and it was just as true in 2005, but we went 2005, 2006, 2007. It didn't crash till 2008, right? And I can specifically remember sitting in the meeting, a PM meeting that we used to have every week. And this one guy who had been super bearish the entire time was like, it just won't go down because there's too much liquidity. He goes, the macro doesn't matter. There's just too much liquidity. I swear that was the beat ass freaking high in the market when he said that, right? They threw in the towel. They gave up.
Yeah.
We hear about the big short guy, right? Who made all that money shorting the mortgages. Okay. It was a movie and it's very famous and all
Yeah.
that. But we don't know that. Well, we don't hear about the fact that he was doing that he lost money for 3 years first. If he didn't
He
have
got lucky.
no, if
Yeah.
he didn't have clients that were willing to stick with him through
Yeah.
losing money for 3 years, he wouldn't have made that money. There were a ton of people that were shorting. I knew people at my firm that were shorting that same crap, but they couldn't anymore because the risk manager was like, "You're losing too much money. You got to get out." Right. So people forget that, right? With the macro. Um, the macro may come true, like you say, but not until there's a capitulation out of the trade first. You know, I still talk to one guy who had that trade on in size. I was talking to him last week, and he's like, "Oh man, those guys made me take that trade off." You know what I mean? I
Yeah.
made fucking millions of dollars and all that.
Yeah.
Coulda, shoulda, right? But the risk managers were like, "You can't do this anymore."
Yeah.
Especially now in the hedge fund world, you draw down 5% in the hedge fund world, they freaking fire you. It's ridiculous, right? So um, I think that's the thing about the macro. Yes, the macro, but the macro could be 3 to 5 years from now once everybody gets forced out of it, right? That's what I think, or that's what I have witnessed.
Yeah. All right. So I want to ask you about a couple of things here before we wrap up. One, any thoughts on, so China was something that was, I would assume, very crowded earlier this year in January to the short side.
I didn't think so, but I don't really have data for the Chinese market. I can only go by what people were talking about. I thought that there were a lot of people saying you buy this China dip. That was actually one of my things when I went into the year. What are the contrarian things for this year that I was seeing? And one of my things was don't be long China, because I think that's what everybody is trying to be contrarian about. Again, because price, they thought price came down a lot. And we can sit here and make that argument. Hey, China, I was actually thinking that this morning, right? Because I was looking at the Shanghai market, had like a big sort of reversal last night, but
Yeah.
it would seem to make sense, right? You can buy China, which is the growing economy right here, super cheap, and in 10 years, it should make you a boatload of money. But I don't think that I can't see positioning in that market, but I don't like it. I kind of don't like China anyway. I lived in Asia for a number of years. And you know, when I was there in the early 90s, it was like so obvious as a young person. I was 22 or whatever. Hey, I should be putting all of my retirement money here because clearly this is where the world is going, right? I was right. They didn't even have a Chinese stock market then. It was all in the Hong Kong market, which is where I work. And Hong Kong back then in 94 was like around called the 10, 12,000 level, right?
It's
And
there
then,
right now, isn't it?
yeah, now it's at like whatever,
At
18,000.
20,000. Yeah.
It's up 50% since 94, right?
Yeah.
What's the NASDAQ up since 94?
Yeah.
What's the S&P been up since 94? And during that time period, in 94, China didn't even exist, man. I was there in 94. There was nothing there. It's gone from nothing. Shanghai was nothing, right? There's a bunch of hutongs, which were these old neighborhoods that hadn't been updated in 100 years, right? And it went from that in 10 years, because I went back in '08 for the Olympics. From 94 to '08, what's that, 14 years? Shanghai went from being essentially nothing. There was no buildings over 15 stories high in the entire place, right? To the biggest city in the world
Yeah.
with highways and tunnels and bridges and skyscrapers everywhere. Went from that to that, and the Hong Kong market has returned 50% in 20 years, whereas the Nasdaq's God knows how much it's gone up since
Yeah.
then, right? So I've never been a big believer in the China thing anyway, personally.
I haven't been, I won't touch the ADRs anymore, but I'll trade let's see, I'll trade the ETFs, but not the ADRs because there's too much single company risk with what they do over there. I did buy that China dip in January and for a trade. I made some money on it, but just
Good.
wondering your thoughts there.
Yeah, I don't
But
love it. Not to say it can't go up, but and again, it's all tradable. You know,
yeah, great.
gets overbought, gets oversold, whatever it is, right? It's all tradable, right?
Um, all right. Lastly, here before I let you go, I got to ask you about this. So, maybe this is crazy, you know, but a lot of the time that's kind of what some of the biggest trades can be. Is there a point where the yen could be the ultimate contrarian trade?
Again, let me preface this with this. My stuff now, for the first time, is giving me an opening to buy yen for the first time. Which means that it's getting seriously crowded. So the answer in the short is yes. But is it really that contrarian when everybody's talking about it? You know,
Are they?
I haven't put the trade on yet. I need some kind of confirmation to do it. But well, yeah, you just asked me. I hear people talk about the yen every day, right? Um,
I hear a lot about how it's collapsing, though.
yeah, well, it
A lot
is.
more.
It
Yeah.
is. I mean, look, I will be getting, I assume, at some point here, as soon as the market can give me some form of confirmation, I will probably be getting long yen. So I hope that I'm wrong about that and you're right. Um, because I'm probably gonna have the trade on at some point in the next, I don't know, maybe few days.
I think it's more because again, it goes in with the bear macro thing, right? Everybody's like, oh, the yen's going to collapse and it's going to take the market down. I think there's just a lot more people on that side of it.
The
But
yen's gonna collapse and it's gonna take the market down. The yen's
because
gone
the carry trade's going to blow up and they're
the
going to
yen's
have
gone
to,
from 72 to 62 this year. It is collapsing.
yeah.
Stock market's at
And we're
all
not going down. Right.
right.
Yeah.
So like I don't know about that, right? Um,
You think that they don't have swap lines, buddy? I mean, like that was my thing. I mean, like from what my sources tell me, I mean, they're not stupid,
It's
you
just more
know.
bear fodder, man. That's that.
Yeah.
They're looking for anything. You get these people. It's like the China Taiwan thing. They love breaking that one out when they can't come up with anything else to be bearish about, right? Oh, well, when
They
China
made that
attacks
up, you know.
Taiwan, I always left because I lived in Hong Kong and in Asia for about 6, 7 years. And I don't want to sound racist or anything, but any white person who thinks that they understand what's going on in China, to me, is lost. Okay. There's no freaking way you understand what's going on in China. You just don't. This is a country that has an incredibly long history, and their government is totally different than what ours is.
Well, and they're not historically aggressors.
Their whole thing is totally
Yeah.
different than what ours is, right?
Yeah.
So if you're going to tell me you understand what the Chinese government is thinking strategically, first of all, again, not to be racist, but these people think, in my view anyway, from what I witnessed, think so much more strategically. They're
Right.
able to do that because they
Yes.
have such a longer term time frame. The president of China is going nowhere. He's president for life. He doesn't have to worry about the midterm election. He doesn't have to worry about his election. He doesn't have to worry about it. These people have much longer term thinking. So you can't relate to that. So people that tell me, oh, well, they're going to attack Taiwan because they want to take over the semiconductors. You have no idea what you're talking about, is what I say to them, right? A white man telling me what China is going to do to me is just ridiculous. Okay. So my point being, that's just more bear fodder, right? They're bearish, so therefore they have to come up with something. Oh, China's going to attack Taiwan. Okay, good luck. Good luck. Like,
Yeah.
that's your analysis. What do you know about China and Taiwan? Nothing. Okay. What do you know about the fact that you're short the market? Everything. So you need something to happen. That's all, right? It's all narrative.
Yeah. Well, what was the other thing I heard too? It was like the latest, oh, the put call ratio hit a point for it. I'm like, yeah, we had a half day on Wednesday and the big boys were in the Hamptons on Friday. There's that's just the other thing, that the other straw that's being grasped at.
One of these days, the market's going to go down a little bit. I mean, it went down a few months ago, like 5%, right?
Yeah.
But uh, I, I ain't going to be a part of it. I can tell you that, you know, I ain't going to be a part of the short here. I have no way of getting short here. No way. There's nothing in my data, nothing in my process, which again, I didn't get short stocks in '08 either. Okay. I didn't catch that. I made money in '08. Not short stocks and not long bonds, which were the real two big trades, right? But I had some shorts based on my process and some other stuff like energy. I was short, right? So oil went from whatever it was, 120 down to like 40, right? So that was
Yeah.
as good as being short stock. So should something like that happen anytime soon, hopefully I'll catch it somewhere else.
Yeah.
I sure as hell ain't catching it in short stocks here, which
Yeah.
is fine. Like I say, I don't care. That's the other thing that people get caught up in, I find a lot, right? They have to catch it in this market because this is the market they've been losing money in, so they have to make their money back, right? But why? Who cares where you make your money? When people look at my returns, they don't go, oh, you made money in '08, but you weren't
Yeah.
short stock, so you suck. Okay.
Yeah.
No. Say, oh, you made money in '08. That's great. They don't know how I did it. They don't know what I had on. I can take them through it if I want to, but it doesn't matter where you make them. Who gives a crap? This whole thing of
Yeah.
you need this market to pay you back what you've lost. It's so dangerous.
And you can, like you said, like there's no there's no move to short now, but that can change quickly. Things can change very fast. And then, like we said, okay, so you missed the first 2.5%, you catch the next 20, great.
The positioning shows me if people are
Yeah.
euphorically bullish or whatever. I'll be the first one to short it.
Yeah.
Okay. But I don't see it. And having watched this data and this stuff for so many years and watch how the data moves, I can't really predict what it's going to do, but from my observation, I don't see it happening anytime soon. I really don't. And like I say, it happens in 2 weeks. I'll be the first one to short it, but I just don't see it happening. They're refusing
You
to,
need, yeah, we need at minimum that, like I think we talked about earlier, that bread thrust, everything's got to catch up.
yeah.
And you just need the vertical move. If we're going up and then sideways and then up and then sideways, that's not anything wrong. I mean, yeah, we could pull back, but
Of course.
Probably just a pullback.
We never know, but that's what it looks like to me. That's what it has looked like to me for a while here. So on it goes. And we're at all-time highs today. So I'm glad
Yeah.
I'm glad I'm not short.
All right. Well, Jason, thank you. We're gonna wrap it up here. If you or if anybody's watching, where can they find you on socials or anything if they're trying to look you up?
Yeah, crowdedmarketreport.com is our webpage. Um, I'm on Twitter. I'm on you. If you go to YouTube, I do like videos on there all the time under Crowded Market Report. And I'm on Twitter too, but it's like, I don't know, crowded underscore or something, MKT underscore RPT or something like that.
Got
Um,
it.
I
I'll
don't know.
put it in. I'll put it in the description for everybody.
Okay, thanks. I'm still not really very good at this computer thing, so I'm too old.
That's all right. Well, AI can do it for us pretty soon.
There you go.
We'll
Yeah,
get Jensen
all I'm gonna have
Wang
to
to
do
do it.
is all I'm gonna have to do is think it.
Yeah. All right, buddy. Thank you very much. You guys take care. Don't forget to like, comment, subscribe. Go follow Jason on his pages. You guys take care, and we'll see you all in the next video.